Today, stocks closed out with a doji candle. Our stocks waiting for this to happen tomorrow. When we come over and look at how the indices fared across the board today, the Dow was down 89 points. The NASDAQ was up 136 points. S&P 500 up 6 points. Russell 2000 being down 1.82. However, when we look at advancing issues versus declining, we had 62.4% of issues declining on the day. So overall, as we look at this doji candle, we can clearly see that there was more weakness under the hood. Then when we come over and look at the sectors across the board, notice a majority of the sectors today were in the red. Only 3 sectors were in the green: communication services, technologies, and consumer cyclicals. And it's really no surprise that technology was one of the leading sectors out there for today. For instance, if we come over real quick and take a look at NVIDIA, just a rocket ship on the way up. Can't stop, won't stop. Look at SMCI today. Big gap on the way up. And let's not forget, AMD also gapping up higher. However, with AMD, it failed to close at the session highs. If we look at this article right here, AMD announces $6 billion buyback and the shares climbed 6%. Now, when we look at this chart, we have a large gaping gap from today. We have a large gaping gap from earlier this week. So are we about to see more gaps come back and get filled? Now, as we come over and look at the fear and greed index, notice we are inching closer and closer over into extreme greed. So we got to ask ourselves this question: have stocks gone too far too fast? This article right here says, has the epic rebound in US stocks come too far too fast? What investors chasing the rally should keep in mind? Now, keep in mind, whatever comes up must come down at some point. However, will it be before we run up to all-time highs? If we scroll down here real quick, I want you guys to take a look at this. The market has retraced from oversold to overbought. Yeah, no joke. We know the market's overbought. But what about here? Tariff agenda remains unsettled. Now, keep in mind, there's been a 90-day pause on a majority of countries. And recently, we've had a 90-day pause on China. But what happens at the end of those 90 days if a deal is not met? Or more importantly, if one country or countries do not hold up to their end of the bargain. And tomorrow, are we waiting Jerome Powell? Jerome Powell may finally grant Trump his interest rate wish thanks to China. However, if we come over and look at the Fed watch tool, we can see now the market is still not pricing in the first rate cut until September. Let me know in the comment section down below, when do you think will be the first month that the Fed actually starts to lower interest rates out here? Then we come over and look at what the White House was announcing today. They're announcing $1.2 trillion in economic exchange. However, this article says, but wait, how can they offer a $1.2 trillion exchange when we look right here, their GDP is not even close to $1 trillion. So how is that going to work out? And it has me scratching my head. Is this nothing more than smoke and mirrors as they continue to try to prop the stock market up? As we come over and look at the volatility index today, we see the VIX was actually up 38 cents on the session. Look at this on the 5-minute chart. We see the VIX climbing up towards the end, but notice what we saw with the S&P. The SPY was actually up 75 cents on the session. We look on the daily chart, we have a doji-ish looking candle, but it did close higher than the prior day. So that stat about the VIX this time ends up falling within that 15 percentile where it just simply did not pan out. But nonetheless, the fact that the S&P was able to eke out a small gain while the volatility index was also able to be green today is a warning sign of what could be to come in the very near future. Jumping back over and looking at the SPY chart, notice the MACD indicator on the daily chart showing no signs of whatsoever of letting up, meaning the rally may go ahead and continue. Are people just going to keep FOMO buying on the way in? On the 4-hour chart, we can see the MACD indicator kind of flatline. We had that push up. We have this consolidation up here. Then when we dive down, start looking at the 30-minute chart, notice what we did. There was 2 situations that I talked about where the MACD indicator could get down towards the 0 line. 1, we consolidate up here at these upper levels, which is what we have been doing. 2, we start to pull back, which we have not seen at this moment just yet. Now, if we look at these 2 profiles, we're doing a very good job of consolidating up here at these upper levels. You can see we came into this minus development area, but when we broke value area low, we never made it anywhere close to the lower third of the range. Now, to remind you guys of 3 amazing prop firm offers: Apex Trader funding, 80% off all their evaluation accounts, special pricing for the higher dollar accounts like the 150, 250, and 300K accounts. My Funded Futures, 30% off the expert plan. And if you're a first-time user of My Funded Futures, you can get 50% off any evaluation out there. And last but not least, one of my favorite prop firms out there, Take Profit Trader, 30% off all their evaluation accounts and no activation fee. Take advantage of these offers. Use the link in the description box down below. Then as we come over and look at the futures markets real quick, on the 4-hour chart, we see that gap up from Sunday night, see that push up, we see that upper level consolidation, and something I've been warning about all week on Sunday night gaps. If the futures markets do not fill that gap by Thursday at 5 p.m., then watch out. Normally it's going to be several weeks before we come back and visit those gaps. So if you're short the market, you may be trapped for a little bit longer. Now, I am still looking at if we can start breaking down here from this consolidation. I want to see the market come back and re-auction this area. Something we were talking about on the live stream was the candle bodies to the candle wick, which is basically a structure breakout point, which still has not come back and been tested yet. If you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. Tomorrow, we're going to be giving away another Take Profit Trader account. Now, as we come over and look at the daily profiles, notice we have that D as in dog shape profile. Now, what that profile normally indicates is we're likely going to get a breakout or breakdown from this pattern. And quite often, the first way we break ends up being nothing more than a trap. So tomorrow, do we start shooting up higher only to trap the buyers and come working on the way back down? Notice today, we also did not hit the P point. These are 2 consecutive days where we did not hit the P point. So you guys know my MO for tonight. I am even heavily more so going to be focused on trades down towards that pivot point. We look at the volume profile levels. Value area high will come in at 59.14.5. Point of control will be 59.08.5, with value area low being 59.02.00. So if we start breaking value area low, I want to target that P point. I want to target that structure breakout point that we talked about on the 4-hour chart, which is right here. We start breaking below that. Then I want to turn my attentions down towards that minus development area that was basically formed out here on Monday. At some point in the future, we will come back and visit this level. Now, is it going to be this week or is it going to be at a later date and time? Only time will tell. Now, today, when we look at the economic calendar, we had no major economic news to contend with. But then as we go over and we start looking at Thursday, tomorrow, 8:30 a.m., we have the PPI numbers coming out. This could be a market moving event. We also have the weekly unemployment claims, which is expected to come in at 229,000, which is slightly up from the previous reading of 228,000. We also get the Empire State Manufacturing along with the Philly Fed Manufacturing Index. But wait, there's something even more important than that, and that is going to be Mr. Jay Powell is going to be speaking at 8:40. So is Jay Powell going to come around tomorrow to basically, bam, smack the market right back down, or is he going to continue to pump stocks even higher from this point on? Now, when we come over and look at the QQQs, unlike the S&P where it had an inside day, Qs actually closing at the upper end of the range. However, it is a smaller body candle. Now, we have major gaps below us. We have several anchor VWAPs at some point should come back and get tested. MACD on the daily chart, though, still showing no signs of the momentum letting up at this moment. Then over here on the 4-hour chart, what do we got going on? MACD indicator still crossed to the upside. Not a whole lot to see on that chart. 30-minute chart, what do we see? MACD indicator working its way down towards the 0 line. And how is it doing it? By basically the market going sideways. Can't stop, won't stop. The market just continues going sideways. Today, we had a well-defined D as in dog shape profile. And with that profile shape being formed, are we going to get a breakout or breakdown for tomorrow? And more importantly, is it going to be nothing more than a trap? And if so, watch out. We do not want to be the ones holding the bag. If we start breaking to the upside tomorrow morning when that news comes out, are we going to go? Is that going to be a trap to send the market back lower? Notice, and if we do get below value area low tomorrow, I do want to come back and retarget the gap from yesterday all the way at 507.76. At some point, we are due for a correction at any moment. Now, as we come over and look at the futures markets for the NASDAQ, notice the NASDAQ right near the weekly session high. You can see we just went up, and we really have not had anything in terms of pullbacks. The best case scenario we can say is we've kind of had a little sideways action before moving up once again, but really no pullbacks to contend with. On the weekly profile, you can see that large gaping minus development area. Here's that level that we drew out during the live stream, candle wick, candle body, structure breakout point at some point in the future. This is going to be a target location, so you want to keep that area marked off on your chart. Then as we come over and look at the daily profiles, notice we have that nice D as in dog shape profile. And with that being said, right now we are slightly above value area high. which comes in at 21,388.75. The point of control will come in at 21,356.75, with value area low being 21,312.25. So if we start coming back down below value area high, I want to target the point of control. I want to target value area low. I want to target the lows from the day. Then I want to hold a runner all the way down for that structure breakdown point. Keep in mind, we have the P point. This is a second consecutive day where we did not test the P point. So at 6 o'clock, we'll get the new floor trader pivots, and the new P point is going to be a high probability target that I'm going to look to target out here tonight. Now, last week, I just learned this about my funded futures accounts. And if you want to see what that is, watch this next video right here.